So trading the trade deals isn't really plural. There's just one that's important right now, and that's U.S.-China. Because this one I've done to a bigger audience, I wanted you guys, if in case I put this on YouTube, quick bio about me. I started at the CME as a clerk, hated being a clerk, loved the business, became educated myself to be a floor trader, became a member of the Chicago Board of Trade. You had to be a member to trade on the floor. Thought I was going to make my millions of dollars as a pit trader. Couldn't even raise my arm and trade. It was random. I didn't know what was going on. Didn't know much about how fundamentals like this would move the markets, like economic numbers or any kind of Fed policy. And ready to quit. And my story was, my wife, then my girlfriend, said, you don't have to worry about making money right now. Just, I'll support you. She had a good job. Stick with it. And that bought me time, the most important commodity we all have. That didn't get me successful in the pit, but it gave me an introduction to a prop firm, International Trading Group. Didn't know what a prop firm was. Long story longer, I went from making no money in 1999 to more money than my dad, and I was home by 10:30 in the morning, April of 2000, as electronic trading was transitioning and taking over this business. So I learned the stuff on everything, mostly in that environment, okay? I did learn a lot on the floor, but I learned more in that environment, okay? Now, this economic fundamental, like the Fed policy, trading trade deals, as I go to this slide, was really taught to me by a collection of people. I always talk about two guys in the firm, or traders and analysts. They put together a morning wire, pulling from resources we had. They do a 5-10 minute briefing, each of them. And you wouldn't read a whole wire. You'd pick and choose from it. They do economic number previews. They did good briefings. You go up and you'd ask them questions at the end of a session. We'd have impromptu meetings. We'd have scheduled meetings. We'd have Fed meetings. We'd have company meetings, all that stuff. And you started to understand this as a trader, not an economist. So not only did you understand what was important, but you understood it as a trader, not an economist. You understood it the right way for how you were going to apply it. All right? You're not applying it, these trade deals, like the farmers might, right? You're applying it like a trader might, not an investor, not a farmer, a trader. Whether it's Fed policy or, in this case, U.S.-China trade. Now, I've never traded a trade war in my 20 years, 24 years, including the floor in the business. 20 years on this in front of a screen, 4 years, 5 years prior to that on the floor. There was no trade war that really hit us. All right? There was no trade deal good, no trade deal bad. So the European-U.S. trade, not a big deal. The USMCA, which is United States, Mexico, and Canada, not a big deal. They're pretty much path of least resistance. It's the U.S.-China, two biggest economies in the world. All right? And you got to understand a couple questions. Why is it important? Well, number one, for what I just said, trade wars create higher costs that could be passed on to consumers. If consumers get those tariffs taxed onto them, they spend less, economies struggle to grow, and they could contract. Okay? So that's why it's important. Stock markets don't want trade wars. The uncertainty hurts stocks. Any uncertainty, and that's what a trade war does. There's nobody out there, any pundit, any economists, anybody, including myself, that knows who's going to get hurt more by a trade war. Is anyone? Do they pass on the? They're all guessing. It's the uncertainty overall that causes bearishness and weakness to stocks. All right. Second question, and we're going to stay on this page, and I'm just going to talk through these questions, and I'm going to illustrate on this page. And then if you guys got questions, pop them in. This isn't going to be an hour-long event, probably 20, 30 minutes, depending on the questions. But this second question here, what happened last month? Where was the market, and what happened last month? Now, that's kind of rhetorical. I'm going to answer it. Last month, if you just look at the S&P ES, which is 500 companies represent the index, it's the benchmark for how stocks are doing globally. Don't worry about where it was priced. Just know that the all-time highs were here, and it was priced here a month ago. Why was it priced there? Well, it was priced there because it already anticipated a U.S.-China trade deal happening. Both sides were meeting. Late last year, the G20 meeting, President Xi and President Trump had a moratorium. They weren't going to do any tariffs or tariff talks for 3 months. They extended that in good faith negotiations, and they kept meeting, going back and forth. Stock market had rallied to this yellow dot a month ago, and we're at the levels they've re-rallied to now. But they were here anticipating a trade deal was going to happen and a trade war was going to be averted. A month ago, on a Sunday, Trump tweeted he was going to put tariffs out of nowhere on China, a threat that he hadn't threatened in 3 months, 4 months, because negotiations were going on. And all of a sudden, the market says, what the heck is happening? Why is he saying that all of a sudden? Something must have broke down. Sure enough, in the next day or two, we got news over the wire that China was stepping away from some previously agreed upon hold on a second. Sorry about that. China agreed upon, they're backing away from some promises that they no longer were going to agree to. Whether that's true or not didn't matter. Negotiations broke down. So the markets got hit, not just because they broke down and it was 50-50 of getting a deal. It was because they priced in they're going to have a deal. So the sell-off was exacerbated to the downside because what they thought they were going to get, they didn't get. And it all happened on a Sunday. Then the Monday after that, it officially said that they weren't going to have a trade deal. And back and forth they went. We're going to tax this on that. They're going to do this on that. And most of the rhetoric was negative for about 3 weeks. All right. As we went down to the 27 handle, about 200 S&P points lower is what they lost. So that's what happened last month. What was priced in had to get unwound because the negotiations broke down. What has the market priced in since? That they're going to have a deal again? No. We didn't rally the 200 points back because they said they're going to have a deal. Most of this rally, know this, is the Fed getting a heck of a lot more dovish over the last 3 weeks than they were a month ago. Not just the FOMC Thursday or last Wednesday. That was just confirmation. They were pricing in the dovishness even before last Wednesday. That's where most of this bounce has come from, back to near all-time highs across the U.S. indexes. All right? Now, they did get a tailwind. By tailwind, I mean bullishness for stocks. When Trump said that he had called Xi, remember we opened up one day, gap open higher. We had closed down here, let's say. We opened up here, and we were talking about, why are we opening up strong? I really can't find anything. I think it was coming out of a weekend. All of a sudden, a Monday or two ago, Trump says he just got off the phone with President Xi, and they agreed to meet at the G20 meeting. There you go. That doesn't mean they have a deal, but that means it was the most optimistic thing over this U.S.-China trade deal and all those talks since Trump's Sunday night tweet. What day was that he like mid-morning said he just got off the phone with Xi? I think it was on a Thursday, but it wasn't last Thursday. All right, but that aside, that created just some optimism that they're going to talk. Again, not much of the reason for this 250 point spike. It's more the dovishness that the Fed will go to their toolbox, right? What else is priced in that in the market that's driving it? I always talk about this, and I'm going to add it to this webinar. I talk about this ahead of the trading room every day. What are the drivers? It's been this U.S.-China trade deal for the longest time. It became the Fed and the FOMC being dovish the last few weeks. And now the last week, especially the last few days, it's Iran. And some of the confrontations between U.S. and Iran. Is there going to be attacks? Could it be war? No, maybe not. So the market's skittish. It's not real bearish yet, but it's certainly a driver if something happens. So it's important when I do a webinar on trade deals, overall, it's about what fundamentals are driving the market, this being one of them. And if I didn't tell you that Iran and something happens right now where they blow up another tanker or another, if I'm able to sell it right now, I'm going to sell it right now. You got to be able to diligently react. I'm going to talk about that in a second. So those are the drivers. Obviously, U.S.-China trade deals underscored because of the G20. What's the G20? Top 20 economies meet, this time in Japan. And Xi and Trump are going, the headlines that could come out of that meeting are going to be watched. And then the market will start to price in more optimism, or they're just still all talk. But we'll get to that in a second. To this question, to help cover this, what would be a surprise? They're not going to come out of this G20 meeting and say, we agreed on a deal. If they did, that'd be a surprise. That's the definition of a surprise, because nobody expected it. So that's an outlier. They're not going to sign anything out of this G20 meeting. All right. That doesn't mean there can't be some optimism, but that would be an outlier. That would be an extreme. The other extreme would be they come out of the meeting and there's any negative, like really sharp black and white negative comments from either side. Like neither president could agree on anything. It was not a productive meeting. Trump got up and left. That would be bearish. That would be tradable, but that's an outlier and would be a surprise. All right. If it's the same effect, if you remember the summit between North Korea and the U.S., Kim Jong-un and Trump in Vietnam, it didn't have a bearish effect. But the way that ended, if this G20 meeting ended like that, different story, be very bearish, be a surprise, be an outlier, because nobody's expecting that. So those are your two bullish or bearish outliers. They have some comments that say we pretty much agree. We sat down and we hammered out all the disagreements. We got something. Super bullish for stocks. If there's any kind of Trump flipped over the table and threw food at President Xi, that would be pretty bearish for the markets. Now, those are the outliers. What's something inside those two things? So one's bullish, one's bearish. What's going to be inside those two outliers of comments that could come down, that should come down, whether they're in form of tweets, U.S. officials, Chinese officials, press conference, news sources, whatever. You got to be careful when you're trading, in this case, this trade deal, and comments that come down, to not have to think, is that bullish? Is that bearish? Not really sure. And then you buy it. Well, you're not sure. Why are you buying it? In order to make and create an edge and make money on any kind of headline that drops down the wire, and we call them tape bombs, you have to really focus on this phrase: diligent reaction. You have to react, but diligently. You can't drive your car and just hit the gas, slam on the brakes, hit the gas, slam on the brakes up and down the road. You have to know where the brake pedal is when the guy in front of you slams on his brakes. So you naturally react and know what to do. And if you're a real good driver, you already checked your blind spots, you know no one's on your right, and you scoot over because your awareness is up. You didn't have time to think. You ended up in the guy's back seat. If you have to think about reactions to a market based on headlines, it's too late. You're going to sell too late. You're going to buy it too late. The premium's gone. What do I mean by premium? Well, if Trump and Xi and President Xi say something really positive, might not be got a deal, but we really feel like we worked out and they're going to start talks again, you're going to get a knee-jerk upside reaction. But where the market is before the comment, where it might be where you could buy it, it's important to know where it came from and where you're going to possibly get in, because that's the premium that's already gone. If the market is trading here, all right, and you get the tweet or something that's black and white positive that they're going to reach a deal, you got a great location because you bought it at the beginning of the rally. Doesn't mean you can't reach. It depends on the bullishness of the comment, how much you reach, but you got to know where it came from. If you have to think about it, you're going to be buying it instead of here or here after it spikes a little bit. You're going to be buying it up here, or it's going to be too late because now the premium has really been wiped out as to where it came from and to where it went. Instead of trying to exit a winning trade, you're going to be stuck at the top as everybody else who's better than you are exiting their winning trades, and you're seeing your trade take nothing but heat. What's really important about trading any kind of comments this weekend or in any situation, Iran, FOMC, is it's really imperative that your trade goes your way really quick. It's even more important in a volatile headline environment. You can't think that a comment is bullish. You know it's bullish, you react, you buy it, and it just hangs there. Just hangs there because you're going to be in trouble, and it's probably going to do that. You need to have it go your way pretty quickly, and now you're scaling out with profits. There's mechanics behind that, but none of the mechanics matter if you can't diligently react to news. Just know where the hell the price was when the news came out, because if you're too far away, don't bother. And don't ask me what's too far away, because that's all relative, right? Just react whether you get long or short. If there's a comment that's black and white, bullish, bearish, know that without thinking. I spelled it wrong. Sorry. It should be ENT. Kelly, you're the only one that knew that. Nobody else figured that out. It was a test. If you have to think you're dead, don't do it. Use it as an educational moment. I knew you were going to say that, Christine. You have to make sure you're not thinking. Sometimes I'm thinking it's because I don't know if it's bullish or bearish. There's nothing wrong with that, because maybe it's not. Maybe it's a gray area type comment that we shouldn't spike or break. All right. This G20 meeting, because it's in Japan, it's on the other side of the world. So the comments, when they meet, you have to stay, as we get closer, have an expectancy of when, if the comments are going to come across and when that's going to be. So the scheduling of when these two guys meet obviously spikes the probability as when any comments are going to come out. And it's not just this weekend. Obviously, the comments are going to come out during and after the meeting, but all the way through next week, we could see and find out and get comments that drop down the wire throughout the week, because things could have changed between post G20 and pre G20, which is where we are now. What else do you guys think would be, what do you think would be most probable for comments that come out of a meeting? So say they go in and they meet. I want you guys to think about this a second and type in what you think most likely the rhetoric will be. I'm going to give everybody a few minutes. Let's see how many replies I get. And it's important because we'll be able to see, if we get enough sample size of what you guys expect it to be, we get an idea of what most of the rest of the market expects it to be. So think about this for a second and type in a response. We're getting good responses. I like it. So again, what I'm looking for is what you think the most likely headline will be after Xi Trump meet this weekend. Most of you guys, by the way, failed the test, the spell check test. I spelled it wrong on purpose. Kelly and Christine. No, I'll be honest. I spelled it. I spelled as good as my 8-year-old. All right, let's go through some of these comments because they're good. Let me give you mine first. This is what I think. I think of reaction first of the market before the comment. I expect a type of comment that will be a knee-jerk reaction up, but the better trade is the reversal that it'll create. It'll get the market expensive, and then they'll step all over it. I'm not saying in 3 seconds, but I'm also not saying in 3 hours. It's going to be, in my opinion, my thought, similar to the stupid news that Brad and Brent talk about in their podcast. Two guys I traded with at the prop firm that use certain news, call it stupid when it gets the market out of line. I'll say that again. News that comes down the wire that gets the market out of line, but it's really not relevant. Market gets overbought, oversold. That's what I think. And then I backtrack and say, well, what would be the headline or headlines that would create that reaction? Something vanilla, something generic. You know, they think they could get together and meet again, and they pop it, and if they can't hold it and they teeter at the top, then they could take back where they started from and then some. Any kind of big move, and this could be a dud of a weekend, guys. Don't get excited that something's going to happen. It was more likely that there was going to be the reaction that we had last Wednesday with the Fed than maybe with this. I guess the probabilities could be the same, but there's always could be nothing, right? Muted reaction or comments that happen when we're sleeping, when the markets are closed. That's a possibility. Always keep an eye, though, if the markets are open, whether you catch it or not, where was it priced at before the headline? All right, now let me go through what you guys say. All right, I got lost on the chats here. Hold on a second. I went too far up. All right, maybe too. So Jason says bullish with a pro trade deal type rhetoric. Will it be bullish enough? And this is what you got to think about to sustain the pop, or is it just going to get it expensive and we sell off? Next one. No matter what the news is, most likely market sells off a bit. I agree with that, Jim. It'd be better if it popped and then dropped. Well, they're most likely they're not expecting a deal to come from China, but most likely no deal in Iran will still be a problem. I agree with that. But the market's not expecting them to come out with a deal or no deal. If they came out and said this, both leaders have met, no progress has been made and no scheduled meetings are scheduled, that's pretty bearish. It's almost kind of an outlier. That's also a possibility. Agreed to resume talks, says Glavis. That's a good one, Glavis. You didn't have to make fun of my spelling, but I think that's a good response. Agree to resume talks. That would create a pop, but you'd have to get it quick if you bought it, because there's a chance they take back the rally really quick on a comment like that. Steven agrees, or I agree with Steven, kind of a vanilla, agree to keep negotiating. Christine, same as resuming talks. All right, Bill's got one of three possible outcomes. I'm going to read them. First one, most likely. We had a very good discussion and are moving forward, looking to the future. 2, we've nailed down particulars and are about to strike or announce a deal. Or 3, that he says is least likely, talks were a failure and we're going nowhere. I like that. Most likely, good discussion, and we're going to schedule meetings. Number 2, which is a really bullish comment, we've nailed down particulars. Number 3, real bearish, talks were a failure, can't agree, and no talks, future talks are scheduled. The market needs desperately for talks to get scheduled. When I say needs the bulls and any upside to stocks need talks to get scheduled out of this meeting. That's what's already priced in, for crying out loud. Hey, if this is a comment, this is a good one, Kelly. If this is a comment, no agreement, tariffs will continue. If that's just a comment, that's pretty bearish and tradable. Mike, good comment. The Fed's going to have to stay dovish to keep this market up. I think you're right. They can't rely on a hope of this trade deal. More talks, progress. That seems to be a recurring theme of what everybody thinks. So I don't think that should be a surprise that that's most likely what most of the rest of the world thinks. You guys had a lot of nice response, more than I thought. Now, here's something I don't know, but we'll know before it all happens. The timing of everything. So Thursday, Friday, Saturday, we know we open at 5 o'clock on Sunday. Meeting should be over. Our best chance at something would be what? Thursday night into Friday, because they're about 13 hours ahead of Central Time. So right now it's 12:30 in the morning tomorrow. So you got to keep an eye on the calendar, but most importantly, don't put yourself in a position that you're surprised if there's a spike or a break. Why did this happen? Put yourself in a position to catch it rather than have to ask why. And I think even though I didn't do it on purpose, I just blew the spelling of diligent. I'm glad I did, because you'll remember it more. This is a really important phrase. If you can't react, you're going to end up in the guy's back seat. Good drivers know if someone's in their blind spot almost at all times. They're aware when someone's going to maybe break before they break. They're aware if someone's close. They're aware, period. Period. They don't have to think. They react. Same thing with good traders. And do me this, even though this isn't about, or this is more of a general overview for any tape bombs, any headlines, not just trade deal stuff with U.S.-China. Make it part, if you're trading, make it a goal to catch before the end of the year. You got 6 more months. Something where you made decent money on just that headline because you were, in fact, were able to diligently react. Because even though it might have been a surprise, you were anticipating it. And that's what's important about preparing for the expected and unexpected. Now, we have an expected event with maybe some unexpected results. How about when we have no idea about something, it just hits us? You can know how to react to it. If Iran just blew up a drone, you're going to know how to react to it. You're going to have to think. Even if they didn't just do that a few days ago, that just came out of nowhere. Some of Powell's comments are coming down the wire, or Bullard, I'm sorry. Powell's at noon. He's been a dove. 50 basis point cut in July would be overdone, he says. That's bearish. Reiterates, it seems like a good time for insurance rate cut. 50 basis points is not called for right now. 25 would be proper. That's why we're breaking. The premium is out a little bit. It's hard for me to sell it right here because it was around 37, 38 when this happened. So this is like a live headline with Bullard. Number one, you got to realize he's already a dove, and his comments are a bit hawkish. 50 would be overdone next meeting. 25 would be proper. 50 is not called for right now. So the knee-jerk reaction has been from 38.39 to 34. If I'd have sold it right here at 34, I'm sitting with it. I wouldn't be too comfortable. Had I reacted and just sold at 37s when that came down, I'd have a few points and I could manage it from the profit side, right? And we could have got him at 37. The market gave us time to take these comments and right away know that they were near-term bearish for markets. Not only because he took 50 off the table, it's his Bullard, not Powell, but he's a dove coming in. So let's get rid of this and look at the chart real quick. Let's look at these charts. Here's when this comment dropped down the wire, about 31, 32 minutes after. Right in here. This selling was part of the comment that said 50 basis points in July would be overdone. Now, how long did it take me to react to know if that was bullish or bearish? Right away. Not just because it's 50. The market wants 50. The market wants more. He took it off, and he's a dove. Take a look at this heat map. I didn't expect to cover this as part of this event, but this heat map, if you're looking for targets, you were to catch a short, right in here, this 31, 32 even area where there's some inventory, generally will be a good target. Do you think you could sell it now because you finally look and think about if this comment's bearish or not? You're too late. You'll sell it, and the people who sold it at 37 are going to be covering down here. or maybe covering down at 31 quarters, 1100 lot. So you got to know where you're at on the map. And you got to be okay with missing stuff. If you're not okay with missing stuff, you're going to reach, you're going to get your face rearranged. You're not going to catch them all. But make a goal to put this tool in your toolbox of not long time frame trading, maybe news, but understanding how news is affecting the market to see when it gets it overbought or oversold, and maybe validates and becomes a pivotal part in the market where it's a longer time frame, bullish spike like we had a couple weeks ago when Powell's comments fit with the dovish tone that the market was looking for. We rally from the 2,700 handle all the way through this 2,950 over the last few days and all these all-time highs, mostly because that was a pivotal comment, press conference. It was a press conference. Now, I'm not talking about the FOMC last Wednesday. I'm talking about a couple weeks prior to that. This is Sierra, by the way, Sierra charts. So even if I had sold 34 quarter, you ain't getting much out of it. I don't think, and I could be wrong, I don't think if it does go lower through this 31, 32, it doesn't just slice through it. Unless he says something real bearish, obviously. But there's a 900 lot bid from 32 and 1100, 31 quarter. If anything, it has to chop before it slices through it. But make no mistake, that comment got us bearish and tilted us over these last 10 minutes. It didn't have to get you short, but would have kept you from buying it and having this just run right through you. And then you're saying, well, why did this happen? And then you'll read and say, oh, you can't worry about news. That just makes the market go up and down temporarily. It could stop you out of a trade if you don't. You got to make sure you understand what's driving this damn market. And it's been U.S.-China trade for the better part of a few months. That doesn't mean it's the only thing. Some things come and go. If they inked a China trade deal, let's say, then that's gone. See, the market doesn't care how good the deal might be. It just cares that the uncertainty turns to certainty, right? They don't care about the particulars in the deal. They just care that there's no uncertainty left. So there's a relief rally to it. Just a little inside info as to the guy making the comment is a known dove. That's important. Because if he was a known hawk, then his comment wouldn't be as hawkish, therefore as bearish for stocks. But you have a dove, a voter, saying 50 basis points in July would be overdone, and it's not called for right now. They're not chopping that much, like up, down on this 32 even area, but they're like just sitting here, going back and forth a few ticks, which means they're going to clear this inventory out. I don't know how much further down they might go. There's a chance that they clear this inventory out. They're not afraid of it. The 32 even bid for 800, 31 quarter for 1100. It's like, a big guy is standing and people aren't running away from him. They're going to engage. Seems like they're going to engage. Let's watch it. No, I'm not saying the market was looking for pricing in 50 basis points, but it was more of a possibility than before those comments, or something that they would have liked. But it wasn't. If it was a probability, or if they really needed 50, wanted 50, thought 50, we'd be going down further faster. See how they're sitting there? They're just, when they're eyeing big inventory that long, they're not afraid of it. Here's what I'm talking about. This inventory here: 31 quarter for 1,200, 31 half for 800, 32 even had some big size. I think 1,000 that they're hitting right now. nobody should have to, once they go through understanding markets like I do, and most of you guys are in our group, would have to think long that that comment he made was bearish. So they cleared out a good portion of this inventory. They're still at 31 quarter for 1100. I still, if I was short, I'm not, would cover all, if not most. They cleared out some of it and they might pop just a little bit. It could still stay bearish, but pop. They cleared out some of it and then walk away. Not that 1100 lot, but all of it ahead of it. So don't be a hog. If I don't know if anybody got short, we're short, or whatever, but they sat there, went after it, cleared some of it, and now might walk back up just a little bit. This was a pretty organized down bar. So was this one. So I don't know if you heard that, but there's edge zones that come up on my chart red, and then I have an audio. And 33 even, some, hold on. Press secretary is being announced. That doesn't matter. But she's selling it, and it's not going down. That's why you're getting this extra push up. So hopefully this webinar helped prepare everyone so you're not surprised. And then we get this as kind of a bonus. It was only catchable probably if I wasn't doing this webinar and I'm sitting here and I heard it. 37s I see flash, but then I had to read it because I didn't hear it. I got a squawk where they say they squawk out anything that's important and then they print it, or they put it like on the wire type of format. And if you have to wait to read it, it's probably too late. So when he was talking about it, we're trained 37s, and I'm talking, listening, and when I look back and see 50, if he's taking 50 off the table and the market would kind of like it, and the market was kind of on eggshells anyways today, it certainly wasn't bullish. That's another way that you could also diligently react to headlines that come across is, hey, listen, I don't know how bearish this is, but it's certainly not bullish for the particular market you're trading. So you don't have to put a value on it every time and be too perfect. The reason why they started walking back up is they're sitting on, you could see, take a look at this chart here. You could see the size coming as they're sitting on it. And that's when I said they're not afraid of some of this other inventory, 1,000 here, 2,100 here. Going to clear some of it. After they did, that 1,200 was still there below us. And I felt like, you know what? I think people that are smart, that are short, will cover most, and the rest will start chasing it up. Then she comes in trying to sell 33 evens. When I say she, female voice I use for selling. And it couldn't just go down. So it's like, that gives me a clue probability that there's a little bit more upside. You guys got any questions before I sign off? 10 minutes, Powell speaks. Drill down in on times that they're going to meet, know when they're going to meet. Make sure you're in front of your screens, or you have some sort of timely resource to get this information. Know where the market is before a big move from a tape bomb, whether it's this, something else in the future. I don't care. You're trading. You're going to have stories come out, headlines come out that are tradable. Make it a goal and a point to catch one before the end of the year. And then if you get good, catch a couple. Catch a few. Put yourself in a position to make your week, make your month in a trade instead of just grinding stuff out. Grinding stuff out is fine, but if there's an opportunity to sell 37s, see it walk to 34, then to 32, and you could put bigger size than normal, get a bigger winner than normal, maybe you made your week or you made your month. I can't tell you the times that I've been trading like crap and a story would bail me out and I'd make what I lost and then some because I caught some sort of event. So trade this safe. If there's any opportunity, there might not be, but there will be in something for something. Diligently react and learn to spell. We'll see you trading room guys tomorrow. Keep an eye on Paul in about 10 minutes. I did record this and I'll post it on the site and probably on the YouTube channel. You guys that don't know about the YouTube channel, look at it, Edge Trading Group, search that, subscribe to that because there's great videos that are already there and keep going up.